we're going to be looking at May-June 2024 POA Paper 2. Alright guys, let's jump into it immediately. So scrolling downwards, you'll see that question 1 asks us about a cash book. So question 1, on November 2023, John Enterprises had cash in hand of $14.75. The business also had a bank overdraft of $11.25 on its bank account. During November, the following transactions occurred. So we do have some transactions from the 4th to the 30th of November. And using the form provided on page 5, we are being asked to prepare the 3-column cash book. Balance the cash book at month end and bring down the balances into next period, total the discount columns. This was worth 15 marks. Now, as you guys would see, you do have the cash book being laid out there for you guys to use. So I will now show you guys the solution with my sheet at the side. So let's go guys. So let's take this on. November 1st, John Enterprise had an opening cash in hand balance of $14.75. Let's put that in. Balance brought down $14.75 on the debit side. The business also has a bank overdraft of $11.25 on its bank account, but overdraft could not come on the credit side. Next, on November 4th, sales by check total $26.35. This will obviously be on the debit side. This will be going into our bank account. On November 10th, pay the following accounts less a 5% discount by check: L. Smith 840, Key Peters 920. Now the amount being paid to L. Peters would have been 840 less a 5% discount. So let's work with the discount. Discount will be $42, therefore the amount being paid to L. Smith would have been $798. This is the amount being paid, so it will go on the credit side. On November 10th, remember K. Peters was also paid $920 less a 5% discount. Let's work that out as well. $46 is the discount. Being paid $874. Note the discounts will be recorded in the discount received column. On November 13th, B. French paid $1,900 in cash in full settlement of his account of $2,000. Well, this is money being received by us. We're going to debit our cash account. The amount would have been $1,900. Discount allowed should have been $100. On November 16th, cash sales paid directly into the bank. Therefore, we made sales, money went directly into the bank account, $11.25. Let's record that as debit. Great job. Now on the 19th, Mr. John, the owner, gave the business $3,000 by check, which must be repaid in 1 year's time. So Mr. John Jones actually gave the business a loan. So that's going to show up on the debit side as well into the business's bank account. On the 27th, the owner took $800 of the cash in hand to deposit into the business bank account. So money came out of the cash account and went directly into the business's bank account. Let's do that, guys. Money came out of the cash account and went directly into the business's bank account. This is in fact a contra entry where you have the same transaction affecting debit side and the credit side of your cash book. The letter C will go in your folio column to indicate contra. Now on the 30th, rent paid in cash total $1,540. That is money being spent to pay our rent. Cash $1,540. Let's record that. Good job. Now these were the transactions that were recorded thus far. Now finally, we will have the balance of the cash book and bring down the balances into the next period. So let's get that done. Let's look at our cash column, guys, right? So the cash column on the debit side will total us $3,375. On the credit side will give us a total of $2,340. Now remember, we work with the large side and balance of the accounts. So this large side would have been 3375. The smaller side would have been less than that, which would have been 2340. But remember, both sides must be equal. So we're going to be working with the large side, 3375. The missing value that will now bring us up to the 3375 on the credit side will now be a total of $1,035, and this will be our balance carried down for our cash account, guys. There we go. Great. Now let's work our bank column now, guys. On the debit side, total 7,560. On the credit side, total a value of $2,797. So again, the lower value is on the credit side. We must subtract the large side from the smaller side to get our balance carried on value. So let's work with the large side. So in order for us to balance up the account, the missing value, the balance carried on to show up on the credit side will now be a total of $4,763. There we go. Remember the question said also bring down your balances into the next period. Well, balance carried on the 30th November will be our balance brought down the opposite side of your cash book on the 1st December, which will be the $1,035 in your cash column and the $4,760 in your bank column. Now also do not forget to total up your discounts. So let's do that now. Discount allowed will be $100, whereas discount received will be a value of $88. And this is what your 15 marks Part A cash book would have looked like, guys. There we go. All right, time for us to move on to Part B of this question now. Let's zoom up a little bit. Let's see if we could work with Part B. Alright, so Part B asks us to prepare the bank reconciliation statement for John Enterprises for the month to arrive at the cash book balance. So let's move ahead and get it done. Now this bank reconciliation statement will be prepared for John Enterprises. And this will be prepared for the month ending 31st December 2023. Alright, good. Now let's go back to the information and let's see what we have to work with. The following information is available for John Enterprises for the month. Balance as per bank statement 9275, check number 103 for $1,223 and check number 107 for $830 were not shown on the December bank statement. Now these checks would have been an unpresented check, guys. Secondly, let's move on. A deposit of $2,270 made on the 31st December was not reflected in the month-end's bank statement. This will now represent your bank lodgements. Now, they told us to prepare the bank reconciliation statement for John Enterprises to arrive at the cash book balance. So we do have to begin with the balance as per bank statement. So let's begin with the balance as per bank statement. And the balance as per bank statement would have been 9275. Good. And as we all know, once we begin with the balance as per bank statement, we'll have to subtract the unpresented checks. First of all, we have check number 1003. And this value would have been an amount of 1223. Good. The other unpresented check we had was check number 107 for $830. Let's put it in as well. Great. And then finally, we do have the lodgement. Now, as we all know, we simply add the lodgement. And this value would have been $2,270. Alright, guys. Now, finally, once we put everything together, we will now be able to get the balance as per cash book. As, let's add it up and subtract accordingly. 9275, subtract your 1223, subtract your 830, add your 2270. Let's punch it into the calculator. 9492 should have been our balance as per cash book. There you go, guys. This was our bank reconciliation statement for John Enterprises. Now be very careful. If a question asks you to begin with the balance as per cash book, then you simply add the unpresented less the lodgement. But in this case, since you are asked to start up the bank reconciliation statement for the balance as per bank statement, we simply subtract the unpresented checks and add the lodgements. There you go, guys. Good job. Right, time for us to move on to the other part of the question. Alright, great. So that brings us to the end of question 1, guys. And that end of question 1, that would have been worth 20 marks. Awesome. So let's move on to question 2. Now, question 2 asks us to state one advantage of a limited liability company. Well, I already went ahead and gave us the advantage to work with. Well, one advantage of a company is that more capital can be raised by selling shares. Disadvantage of a limited liability company is where decision making can now be slow. Good. All right, moving down. In May 2023, Rosedale Company Limited sold the following shares and debentures to increase its liquidity. We do have some transactions here where they are selling shares. Using the form provided below, prepare journal entries to record the issue of shares and debentures for Rosedale Company Limited. Alright, guys, let's have a look at the answer already being placed here in blue. On May 5th, they sold $180,001 ordinary shares. Well, 180,000 shares by $1 each will give us $180,000, and that money will be going into a bank account. Therefore, May 5th, you'll debit your bank account with $180,000, and you'll then credit your ordinary share capital with $180,000. The narrative would have been required, and the narrative here will be being the issue of ordinary shares. Let's look at May 10th. Now on May 10th, 100,000 8% $4 preference shares were sold. Total here will be 100,000 shares by $4, which can give us $400,000. That would have been the investment being made by the preference shareholders. Well, 400,000 will now be debited to our bank account, as you guys are seeing it here, and the credit will actually go in the preference share capital account. Now, the narrative for this will simply be being the issue of preference shares. Moving down to May 17th, $150,000, 5% debentures would have been issued. Now, $150,000 will be the amount of debentures being received. That will obviously go to our bank account. We'll debit our bank account, $150,000. And while the corresponding credit will be our debentures, $150,000. And the narrative for this will also be being the issue of debentures. There we go, guys. And again, this would have been worth a total of 8 marks. Nicely done. Great. So let's move on to the other part of the question. Now, moving on to part C, guys. Now, part C simply said state one ratio that can be used to calculate the liquidity position of the company. Well, one of the ratios that can be used to assess liquidity will be your current ratio. Moving on to part D. Calculate total annual dividend payable at the end of the financial year for the transaction May 10th, 2023. Listed on page 8 show all workings clearly. Let's go to May 10th. Now, May 10th is where we actually sold preference shares. Rosale sold preference shares, $4 preference shares, $100,000 shares. So 100,000 shares multiplied by $4 will give us a total investment of $400,000. Remember, guys, these are 8% preference shares. 8% preference shares means that the return on these shares would be the actual 8%. So 400,000 was the investment made by the shareholders. They are guaranteed to get back an 8% return. Therefore, 8% by 400,000 will be a total of $32,000. This will be dividend payable towards the preference shareholders at the end of the financial year. Right, moving on to part E. Calculate total amount payable for the debenture interest expense at the end of 1 year. Now notice the caps is 1 year, guys. Let's check this out. Now the debenture interest, as you guys see, 5% debentures would have been for 2 years, 2023 to 2025. Good. So let's check it out. 2023 to 2024, 2024 to 2025, that's 2 years. So let's have a look. 150,000 was the debenture total. 5% was the interest. Multiply that together, you're going to get 7,005. Now the 7,005 would have been the interest for the entire 2 years, but since the question asks us for 1 year, we simply divide by 2. Interest yearly will be $3,750. There we go. Now moving on to part F now, guys. At the end of the year's operations, Rosale Company calculated a net profit of $48,005 before debenture interest. Good point to note. Calculate total amount available for paying dividends to ordinary shareholders as well. So let's check this out. So we need to actually work out how much money will be paid to ordinary shareholders. But first of all, this is effectively, like an appropriation account that you would have used. So let's work it and let's see what we're going to get. Now we're going to start up with net profit per trading account. Because it did mention to us they had a profit of $48,005. Now remember, they said this was a profit before debenture interest payments, so you will have to subtract debenture interest payments. Now debenture interest, as we calculated before, would have been $3,750. Good. Now, after we subtract debenture interest, we'll now be able to get the remaining amounts of profits that can now be appropriated amongst, shareholders. So 48,005 subtract 3750. Let's get that value. We now have $44,750 that can now be distributed as dividends to shareholders. But remember, guys, we already said we're going to actually pay some money towards the preference shareholders. Preference shareholders are entitled to get right? So you guys remember we had worked this out before. Preference shareholders, let's go back, check them out. They're entitled to get 32,000. Great. Make some space here. Nice. So guys, let's see what's happening here. So if we actually pay out the bent interest of 3750, we now have 44,750 to work with. Preference shareholders will be entitled to 32,000. So guess what? We subtract 32,000 from your 44,750, and that will give us the remaining amounts of money that will be available to pay ordinary shareholders. Great. And if you take your calculator and you work that up, you should get a value of 44,750 minus 32,000, $12,750. So ordinary shareholders would be entitled to $12,750. There we go, guys. Let's see if you guys follow this. Now, of course, you could take your ruler and put your lines and stuff as well. Let the examiner know about your calculations. There we go. Alright, nicely done, guys. Awesome job. Alright, time for us to move on to part F2. Calculate the percentage return on investment for ordinary shareholders. Show all your workings clearly. So they're asking us for the return on investments, guys. Now, the return on investment is simply calculated as the dividends divided by capital invested, and to convert this to a percentage, we multiply by 100. So let's check it out. Ordinary shareholders is a question, right, guys? Ordinary shareholders are entitled to receive 12,750. That is their dividend. The investment that they are making, let's go back, let's see what the investment is. Ordinary shareholders are investing $180,000, guys. Look, it's right here, $180,000 $1 ordinary shares. Multiply by 100, and it's going to work up to be 7.08%. Great, there we go. Alright, time for us to move on. Let's see. Well, guys, this actually brings us to the end of this question for your 20 marks. So there we go. Good job with this question as well. Alright, guys, time for us to move on to question 3. Let's check it out. Question 3. Ban and G are partners sharing profits and losses in a ratio 3:2 respectively. Good. So this is a partnership question. At the end of the financial year, 31st December 2023, the following balances were extracted from the books of the partnership after calculation of the gross profit. So we do have the gross profit, we have operating expenses, we have non-current assets at the cost price, we have provision for depreciation account for non-current assets. This provision for depreciation had a value of $215,000. Now, furthermore, we have some additional information for Ban and J, current account balances, drawings, insurance drawings, partnership salary, capital accounts, insurance capital, loan to partnership, interest on loan. Following information available, closing stock had been understated by 3,500 and non-current assets are to be depreciated by 20% per annum using the reducing balance method. Alright guys, let's check this out. What are they asking us for? Well, Part A asks us to prepare the income statement of the partnership for the year using the balances and the additional information provided. So we are to write or to prepare the income statement, guys. So as we're going to prepare the income statement. Alright guys, let's jump into it. Let's check it out. I did already go ahead and actually prepare the income statement for us to discuss, so let's have a look. So first of all, we must have the business's name, the partnership's name, Ban and J, income statement for the year ended to the 1st December 2023. Now guys, we will start up with the gross profit. As you guys saw, we did have gross profit to work with, so gross profit would have been, it's right here, 284,000. Now, gross profit subtract expenses will give us net profit. So great, we have the operating expenses here. But before we have a look at the operating expenses, we did have an adjustment for closing stock, guys. Now, closing stock had been understated by 3,500. If closing stock is too low, then your profits will be low as well. So we need to increase the closing stock, had been understated by 3,500. So when closing stock is increased, our profit will increase as well. So let's add the closing stock understated to increase our profit. So now we have the adjusted gross profit, 287,500. And now we go ahead and subtract our expenses. The expenses that we had to work with would be our operating expense. So let's subtract that, $107,000. There we go. Great. But remember, there was a note telling us about depreciation as well. Let's see the note. Now, the non-current assets are to be depreciated by 20% per annum using a reducing balance method. Now, you guys remember how to work all this. Now, depreciation is treated like an expense, so it must be subtracted as part of your expenses in your income statement. Reducing balance method simply means you take your cost, subtract your accumulated depreciation, multiply by 20%, and you're going to get your answer. So guys, let's check this out. Cost would have been $695. Provision for depreciation as it stands, $215,000. $695 minus $215 multiplied by 20% will give us the depreciation for this year for our non-current assets. Here we have it, the workings, and we have our answer. Great. But guys, you had to look very, very carefully because there's one more interest, one more expense for this organization. Well, the expense was loan interest. Ban gave a loan to the business, $25,000. Interest on loan was 8%. Loan interest will be 8% by $25,000. This will be an expense for the business as well. So adding up all our expenses totaled $205,000. Gross profit subtract expenses going to give us net profit, giving us a value of $82,500. There we go. So this was part A to our question to get our income statement done, and the amount of marks awarded would have been 9 marks. Great job. Let's move on to see what else was expected from us for this partnership question. Now, part B, prepare the appropriation account for the partnership for the year ended to the 1st December 2023. Alright guys, and this would have been worth 6 marks. Let's check it out. Now you're going to start up the name, Ban and J, and well, the appropriation account for the year ended to the 1st December 2023. Now you guys know, the appropriation account is used to show how the profits will be shared amongst the partners. So we can start up with net profit per income statement, which we calculated just above, which gave us a value of $82,500. There we have it. Now, next up, guys, as you guys would know, we now have to add interest on drawings back onto this income statement. And the question gave us the interest on drawings, Ban and J, $3,200 and $2,700 respectively. Check it out. It's right here, guys. This has to be added back onto the profit of the business. Good. A total of 5,009. Now, after you add back on the interest on drawings, next step is to remove or actually pay out the partners their salaries. So less salaries to J, say 6,000. J alone had salaries to collect, so that must be subtracted from the net profit for the partnership business. Now, after subtracting salary from J, next step would be to subtract the interest on capital that the partnership business had to pay back the partners. Let's look back at the rate from the questions. So the partnership salary is here, 36,000, and the interest on capital 3%, and the capitals are 280 for BAN and 260 for J. So we're going to work out those rates. 3% by 280, 3% by 260. Let's check it out. Let's see what the answer would have been. BAN 3% by 280, 8,400. J 3% by 260, 7,800. So the total interest on capital to be subtracted would have been 16,002. Now guys, once you make all the adjustments, net profit, subtract, add your interest on drawings, subtract your salaries, subtract interest on capital, will give us a balance of profit to share of 36,200. And the question specifically told us how we're going to share that profit, and the profit would have been shared in the ratio 3:2. Therefore, BAN will now collect 3/5 of 36,200, and J will now be able to collect 2/5 of 36,200, giving us a value of 21,720 and 14,480 respectively. There we go, guys. Profit have been shared, so nothing remains. There we go. 6 marks. All right, good job. Time for us to move on to the final part of this question, guys. Part C. Prepare J's current account for the year ended to December 2023. Let's go. So we label up current account J. Let's begin. Now, J had an opening balance brought down on the credit side. Let's go back, check it out. Yes, he did. J had an opening balance 7,300 credit. Put that here on the credit side. Now, J had to give back to the business drawings. Drawings going to go on the debit side, 26,000. He also had to give back to the business interest on drawings as well, 2,700. Nice. But he did have to collect interest on capital from the business, 7,008. He did have to collect a salary as well, 36,000. And he also was entitled to a share of the profit as 14,480. All these figures came directly from the question before, and if you guys go back to the appropriation account, you'll find all those figures right there. Now, after comparing what he had to collect from the business against what he had to give back to the business, credit side and debit side, he would have had a closing balance of 36,880. So after a balance of the account, you're going to get that closing balance carried down of 36,880 on the debit side, that come across as a balance brought down on the credit side. And this would have been your current account for J for 5 marks. Alright guys, so this partnership question was worth an entire 20 marks. Okay, pretty good. Time for us to move on to question 4. Now, question 4 was actually a production budget question, which wasn't too bad. Let's check this out. Ariana manufactures a component which is used in the production of cell phones. Sales of the component for each of the first 3 quarters are forecast as follows. Sales forecast quarter 1, quarter 2, quarter 3. We have the amount of units there. Ariana has been operating with a policy whereby she maintains a closing stock sufficient to cover 5% of the next quarter's sales. Ariana forecasts that sales in the last quarter will be 808 units. Prepare a production budget for each of the quarters 1 to 3 of 2023. Alright guys, let's do this. Now we all know what a production budget looks like. Let's put it down one time. Now we do have a little space here that we could actually put Ariana's name here. Good. And we can put the heading production budget for the period ending 2023. Great. Nice. Alright guys, let's enter or let's put down our format for our production budget. Sales. Good. Now the sales, let's handle up quarter one first. Sales for quarter one would have been 5,100. Let's check it out. Good. Nice. Now you guys remember, next step is to subtract your opening stock. In this case, opening stock was 0, guys. There was no, they didn't tell us about opening stocks. Opening stock was 0. And you normally add back your closing stock. Now, what was the closing stock value in the first quarter? Well, that's where this little note comes in. She maintains a closing stock sufficient to cover 5% of the next quarter's sales. So 5% of the next quarter, so April, June, 6,300. She will have to maintain a 5% of this as the closing stock in the first quarter, guys. So let's see what that's going to work up to be. That's $315 worth of closing stock. Yep, that's what it is. Let's put it in. So sales less opening stock, add closing stock, gonna give us the production units. The production units, after we put together this calculation, should give us a value of $5,415 units, in fact, right? Remember, this is units. Right, guys? Units. Great. Nice. So let's see if we can move on to have a look at quarter two. Now, sales in quarter two would have been 6,300. So I'm going to put that here. Opening stock. Now, remember, guys, closing stock in one period will be the opening stock in the next period. So opening stock in quarter two will be 315. Our closing stock in quarter two will be 5% of the sales in the third quarter. So 6760 by 5% is $338. That should in fact be our closing stock value here. So sales less opening at closing gonna give us production units of 6323. Great job. Now let's move on to quarter three. Now quarter three sales would have been 6760 units, 6760. Opening stock. Opening stock would be closing stock from the previous period. So opening stock would have been 338. Great. Our closing stock will now be 5% of the next quarter sales, which is the 880. That's what they gave us this note here. Last quarter's 8880, $8,808. So your closing stock will be 5% of that value, which is $444. Well, units, sorry. Keep on saying dollars. Those units, right? So then put together your values. 6760 less the opening stock, add the closing stock. 6760 less 338, add 440, gonna give us production of 6866. Right, there you go, guys. And that was your production budget. How much marks that was worth? 7 marks. Good job there, guys, so far. We're looking pretty good with that. Right, let's move on. Part B. The selling price per unit during the budget will be $8 per unit. How many years should Ariana plan to sell if she wishes to achieve a sales revenue target of $45,000 in a quarter? Right, guys, so basically asking us how much units should she plan to sell if she wants to achieve a revenue of 45,000 in a quarter. Well, it's very simple. She wants to achieve $45,000 in terms of revenue. Each item will be sold for $8. Therefore, 45,000 over 8 can give us 5625. That is your answer. Even put your little formula. Units required is your target revenue divided by selling price per unit. There we go. Right, time to move on to part C, guys. Okay, now part C gives us a little payroll situation. So let's check this out. Ariana employs Selena Smith as a production worker. Selena is required to work a 40-hour week and is paid at a rate of $200 per hour. Hours worked in excess of 40 hours are overtime and paid at a rate of time and a half. During the second week of April, Selena worked a total of 44 hours. Calculate Mrs. Smith's gross pay for the week. Well, gross pay includes basic pay plus overtime. Let's check out her basic pay. Basic pay, 40 hours, work week. Basic rate is 200, so 40. $4. So 4 hours by 200 by 1.5 going to give us 1200. So her total gross pay will be the basic pay plus the overtime to give us a total of 9,002. 4 marks there, guys. Good. Moving on. For the month of April, Selena earned a gross pay of 33,200. The following data is to be applied to gross pay: national insurance, income tax deduction, monthly credit union contribution. So all of these here are her deductions. Let's see. Gross pay minus deduction is going to give net pay. Gross pay would have been what we calculated above, 33,200, as you guys saw up there. Okay, gross pay for the month, 33,200. And now the deductions will include national insurance is 5% of that gross pay, 1660. Income tax deduction will be 10% of that as well, 3320. And monthly credit union dues, $300. So these are both statutory and voluntary deductions. Gross pay less all deductions going to give net pay, which will include 27,920, another 3 marks. Let's move on to the other part. Now, part 3. Complete the following check for the net pay amount, which is due to Selena Smith at the end of April. So, guys, we have a blank check here that we need to prepare. Date, 30th April 2023. Paid to, well, the person that this check is being paid to is Selena Smith. So let's put in her name here. Good. Sum of her net pay. Let's go to see what the net pay is. $27,920. I'll quickly put that here as well. 27,920.00. Good. And now I need to go to the top to write that in terms of words. Right, there we go. Good job, guys. $27,920.00, put a little dash in extra cents. I know signature gonna come here, and the person making this payment will be Ariana. So let's just put Ariana's name here. Great. There you go. And this is what it would have looked like, guys. All right, so Ariana was the one making the payment. All right, good job, guys. Let's double check that. $27,920 is there. Ariana making that payment. 3 marks, a nice check for us to repair. Great, so that brings us to the end of question 4, which was with another 20 marks. So guys, let's move on to question 5. Now, question 5. Question 5 was a pretty big question which consists of double entry. Let's have a look. So Bobby, your sole proprietor, present the following list of transactions in the month of May. We have a list of transactions here, and we will have to work in chronological order, in order of date, and using the form provided on page 2023, record a double entry for the transactions given. In the relevant ledger accounts, be sure to name the accounts appropriately. After the account has been opened, use the same account throughout for recording subsequent transactions. So they gave us a list, a blank sheet here, guys, or a list of all the blank accounts that you guys had to put together. Right? So you had to actually label them up appropriately and record the transactions inside here. Now, interestingly enough, the question never said that we should balance and close off the accounts, suggested to record the transactions in the appropriate accounts. Normally, as you guys know, the examiner would be clear to state the balance and close of the accounts. Because remember, in one of those questions above, let's go straight back above. In question 1, they asked to record the cash book and then balance the cash book and bring the balances into the next period. And this question 5, they didn't ask that. They just simply said to record the transactions in the accounts. It wasn't too clear whether they wanted us to balance out the accounts or not. So let's go ahead and record the transactions as being requested by the CXC examiner. Well, let's go. May 1st, 2023. Owner made a bank deposit from his personal resources. For the two accounts, there will be bank and capital. Owner made a deposit from his personal resources, that is bank and capital. Well, what we should do here is debit the bank and credit capital. Nice. Now on May 6th, he withdrew cash from the bank for business use. So he took money out of the bank, credit the bank, and put that money in the cash account, guys. So we need to open a cash account now. So we're good there. Double entry went in. So May 8th, proceeds of sales for the week were banked. This here was your sales account. So your sales will be credited. And they said it will banked, therefore your bank account would be debited. On 9th, user checked to purchase used delivery van with extra spare parts, used delivery van and spare parts account. Okay, so they told us use a van and spare parts account, which we will do. Now we use a check to purchase items. Therefore, you credit your bank, you debit your van and spare parts account. Now on the 12th, bought inventory on credit from Rob Smith. The terms were 5/10 net 30. That basically means that we have 30 days to pay. If we pay within 10 days, we will get a 5% discount. Therefore, we need to have a purchases account as well as Rob Smith's account. Debit purchases, credit Rob Smith. On the 13th now, sold inventory in terms of 2/10 net 30 to Peters. Again, net 30 means Peters will be given 30 days to pay. If he pays it in 10 days, he'll get a 2% discount. What accounts we need here? Well, we need to have Peters' account, and we need to have our sales account, which we already did record. So guys, what do? Well, we'll credit our sales, and we will debit Peters. Now on the 15th, cash sales amount to 3,006. Cash sales means we will debit the cash and we will credit our sales. May 18th, paid cash for petrol and use of servicing of delivery van. Well, credit your cash. And we will need to have another account called a van expenses account. Let's create a van expenses account, which must now be debited. Moving on, settle the account to Rob Smith in full by check on the 21st. Now remember guys, Rob Smith, we're owing him $17,000. We will be getting a 5% discount if we paid within 10 days, and we did pay within 10 days. Alright guys, so let's see how much money we are actually paying Rob Smith. 10% discount of $17,000 will be let's see what discount we are getting from Rob Smith. We're getting $1,700 off from Rob Smith. So we are actually paying him oh, sorry, this 5%, right? Not 10%. We're getting $850 off from Rob Smith. So we're actually paying him $16,150. So let's record that. So paying Rob Smith $16,150 by check. Therefore, you credit your bank $16,150. You debit Rob Smith $16,150. But guys, what about the discount? Well, remember that is called a discount received in our part and is worth $850. So to balance up the accounts, to record the discount received, you'll now debit Rob Smith to the $850, and you're going to open a discount received account, and you're going to credit that discount received with that $850, guys. There we go. Now moving on, paid cash for miscellaneous business expenses. Well, that is miscellaneous expenses, which will be another account that we're going to create. Paid cash means you're going to credit your cash and debit your miscellaneous expenses. There we go. Moving on to the 26th. By 26th, Bobby paid his home insurance premium in cash. Now, when the owner pays his own personal expenses through the business, we call that drawings, guys. So we're gonna credit the cash account. And we're gonna debit drawings. Settle the business electricity bill by check. Well, that's a business electricity account, so we're gonna create the electricity account here. Debit that electricity account. And we're gonna credit bank. S. Peters settled his account in full by check. Now let's check to see what S. Peters is actually owing us. Remember, S. Peters was owing us $9,000. He had 10 days, 30 days to pay. If he paid it in 10 days, he get a 2% discount. But he's paying only 28, therefore he's out of the range for that 2% discount. So we're going to actually record how much he's paying in full by check. He's paying us $9,000. Debit your bank and credit S. Peters. Now the owner made a bank withdrawal for personal use on the 29th. Again, you guys know that is drawings. So let's go ahead for our drawings account. We'll debit the drawings and credit bank account. And finally, on the 31st, received a total of $1,200 cash from a sale of some old van spare parts and realized a profit of $200 on the sale. Right, guys? Now, when you're actually selling your equipment or your assets, you will have to open a disposal account. So let's create a disposal account. This will be a disposal of fixed assets account. In this case, spare parts. Now, he received $1,200 cash from the sale of old van spare parts, realized a profit of $200. The actual value of the parts that he sold was $1,000 because he got a profit of $200. So what we need to do is to transfer $1,000 worth of spare parts out of the delivery van account by crediting here. That's going to go in your disposal of spare parts account, 1,000. Here we go. And now we're going to receive the 1,200 cash. Well, once you're receiving 1,200 cash, you'll now debit your cash, 1,200, and go to your disposal account and credit that there. And what the difference between those two, 1,200 money we received for the value with 1,000 will be $200 profit. And there we go, guys, right? Now this would have been your double entry for this question. Now, as I stated earlier on, the question never stated the balance to close up the accounts. So this is it right here, guys. So there we go. This is your answer for that 2024 question 5. So there we go. Now this now brings us to the end of this paper, June 2024.